Here are the steps you need if you want to raise your VantageScore 3.0 real quick. First things first, I want you to really understand. See, recent surveys say that 87% of Americans do not fully understand VantageScore. A lot of folks talk about VantageScore 3.0 and whatnot, but they have no idea what the score really is. So you have to really understand what VantageScore is before you can raise it. So VantageScore is a credit scoring model that lenders use to evaluate your financial responsibility. So think of it as a grade that ranges from 300 to 850, with a higher number indicating what? A greater degree of financial responsibility. Okay, so you can get like a better credit card rates, you can get higher limits, better loans and lines of credit and whatnot. So VantageScore is a scoring model that was introduced by the three credit bureaus, Equifax, Experian, and TransUnion in March 2006. So they were trying to actually compete with the most popular credit scoring model of the time, the FICO score. I mean, both are still in use today, but they calculate your scores very differently. So it's really important to have a clear analytical foundation. Okay, so how is a VantageScore really calculated? Well, the way it is calculated depends on which version of the score you are using. So the Vantage 3.0, the VantageScore 3.0, that's the best known version. But the credit bureaus released the VantageScore 4.0 about 5 years ago. So basically, you're looking at payment history, 40%, your depth of credit, 21%, your credit utilization, 20%, your balances, 11%. Here I'm talking about your open balances, okay? Your recent credit, 5%, and your available credit, 3%. So basically what you want to do here is you want to actually watch your payment history and your depth of credit. Very important. If you want to raise your VantageScore 3.0, you really want to pay attention to the three fundamental factors. So those are your payment history, your depth of credit, and your credit utilization. So here we have it, boss. So now you have a clear idea of what we're talking about when we mention the term VantageScore 3.0. This is just a competing model that actually competes against the FICO score. Okay, both pay attention to your financial responsibility. So first thing first, you want to understand. By the way, welcome back to the channel. So in today's conversation, we are actually talking about how to raise your VantageScore 3.0. Step number 2. What I want you to really think about, I want you to think about your payment history. See, when we talk about payment history from the perspective of your VantageScore 3.0, we are looking at whether you pay your bills on time. Boss, this is what it is. This is where late payments hurt your score. We were speaking about your VantageScore 3.0. So the later the payment and the more late payments you have, the more serious the impact on your VantageScore. Okay, so this is really important. Now, how recently you made a late payment also matters. So because what happens here is that those late payments, they stay on your credit report for 7 years. Think about it, 7 years, but their effect diminishes over time. Okay, so that's for payment history. Depth of credit. So this is actually a criterion that looks at the age of your credit accounts. So this includes your average, oldest, and youngest account age. So older accounts ages help your VantageScore 3.0 because they give lenders a longer term view of how you manage your money. Okay, in other words, have you been responsible in the past and all that kind of stuff. So that's for depth of credit. Next, we have what? Your credit utilization. Credit utilization looks at how much credit you use and how much you have access to. So there is there's actually an ancillary criteria. That's your CUR, your credit utilization ratio. Okay, so basically when we talk about credit utilization, we're speaking about a criterion that takes into account your balances on installment loans, but focuses more on your revolving credit. Also, we have balances category on your VantageScore. That's one factor. So this looks at the total balances remaining on all of your credit accounts, both current and delinquent. Very important. A lot of folks believe it's only the current account. No, if you have delinquent accounts, that's also taken into account. And so high balances can hurt your score even if you are current on all of your payments. But the effect is not really severe, especially in the VantageScore 4.0 model, where it only accounts for 6% of your total score. And recent credit looks at the number of credit accounts that you have recently opened and the number of hard inquiries shown on your report. Very important to understand that. So now let's talk about good score. Again, folks, in today's conversation, I'm speaking to you about today's topic is how to raise your VantageScore 3.0 real quick. Okay, we're not here so like being lethargic. No, we are going to show you how to raise it real quick. Now, what is really a good score? Let's have a conversation about that. So everybody talks about, my VantageScore is good. My VantageScore is excellent. What are we talking about? Well, if you have your score is between 781 and 850. Okay, let's just start with the bottom. So if you are from 300 to 600, you are considered subprime. That's like poor credit. If you are between 601, 601, and 660, you are considered near prime. Okay, so that's about, I would say, average credit. If your score ranges from 661 to 780, you are considered prime. Okay, so that's like, I would say, what we call good credit if you are speaking about FICO score. And if your score is ranges from 781 to 850, you are considered super prime. That's like excellent credit. Okay, so it's really important to have a clear idea of the definitions and terminology that lenders use when they assess your VantageScore, whether it is 3.0 or 4.0, it doesn't really matter. So super prime should be your ideal goal, boss. If you're sitting right now listening to me, you're probably in the subprime or the near prime categories. Your ultimate goal in this life is to be in the super prime tier when it comes to the VantageScore. Very important. So super prime is the best rating you can have, and this indicates a financially responsible borrower who can be trusted to pay back what they borrow. Prime credit is still a good option, and you shouldn't have much trouble getting approved for loans or lines of credit if you fall in this range. So anything below that, you have a lot of work to do. But you know what? There's nothing impossible here. Okay, now you have the information that you need. You understand what really goes on into your VantageScore 3.0. So you'll understand what factors you need to pay attention to. And I'll speak about those factors now. I'll talk about bill payments, credit debt, and so on and so forth. But what I'm trying to say here is that it's important to really situate yourself on the spectrum, on the VantageScore spectrum. Where you at, boss? Where you at? Do you even know? That's the bigger question. Do you even know your VantageScore right now? Talk to me. Let's talk about bill payments, boss. The thing is, if you want to raise your VantageScore, whether it is 3.0 or 4.0, I don't care whatever happens, boss. I want you to pay your bills on time. Seriously. We got to be in a situation where we have to pay our bills on time. And I don't know how you get it done, but listen, either you automate things. In other words, once a month, you have it at a certain date, ideally 3 or 4 days before the official due date from the credit card issuer or the lender. You want to have an automatic payment that goes from your checking account into the lender's account or the credit card issuer's account. Very important. That's one way of doing it. Okay. Or you can make smaller payments throughout the month. That's our preferred method. The thing is, a lot of folks, they have busy lives. They have 9 to 5. They have family. They have children. It's just complicated. And the thing here is that a lot of folks tend to forget bill payment day. Okay. And this happens, being there, done that myself. So this is not a big deal. But what you want to do here is you want to be in a situation where you make smaller payments. You can try to make smaller payments 4 or 5 times. Let me give you an example. Let's say your minimum due, okay, on your credit card balance, on your credit card is $200. That's what the credit card issuer wants you to pay this month. Okay, what do? You can actually say, you know what, I'm going to pay $50 every 2 days or $25 every day. What will happen here is that if we divide 200 by 8, we have 25, right? So that's 8 days. So after the 8th day, you are totally fine in terms of not actually having any late payment penalty. Okay, what you do here is that you can actually pay more than the minimum due, which we advise anyway on this show. So what you do here is that you can actually set it up so that you just pay every day or every 2 days. The whole thing here is that you want to be in a situation where you do not forget your bill payment date. Very important, boss. Okay, If you know that a payment is going to be late, you want to reach out to your lender to notify them and request that they do not report that late payment to the credit bureaus. Very important, boss. Very important. So here are a few pro tips for you. Few pro tips. Please, I want you to set a reminder. Either you have a lot of apps nowadays, you can have a reminders in via email or via text that tells you, hey, listen, my credit card payment is due, so I have to pay it. This is very important. If you want to raise your VantageScore 3.0 score, what you want to do here is that you want to actually look at credit depth. Boss, we are still have today's topic. Today's topic is how to raise your VantageScore 3.0. So I spoke to you about bill payments being one important criterion. Now I want to talk to you about credit depth. Okay. Now what is that? Well, it just means that, boss, you want to diversify your credit mix. Okay, so basically, if you have one credit card only right now, I want you to try to get a loan. Okay, this could be even a secure loan, doesn't really matter, as long as you have a diversity of accounts on your credit report, so that your VantageScore 3.0 or 4.0 for that matter can go up. Okay, or you can even try to get a line of credit, so a credit card, line of credit, student loans, mortgage. I'm not asking. Understand me well. I'm not asking you to actually get in debt just for the sake of increasing your VantageScore 3.0. No. What I'm trying to say here is that if you need funding, if you want to get a loan, when the time comes to get a loan, yes, you want to go get it, because they will help you improve your credit depth. When we speak about your VantageScore 3.0 or 4.0, okay? So depth of credit is the length of your credit history and types of account that you have, okay? So try to have a mix of revolving and installment debts on your credit report, but do not take out a loan just for the sake of improving your credit. Boss, I just said it. I'm repeating it. Very important. So what's the deal here? If you are going to apply for a new loan or line of credit, I want you to submit all of your application within a 14-day period, so they count as a single inquiry. We want to be in a situation where we are counting inquiries, because those inquiries, they have a detrimental effect on your FICO score or your VantageScore 3.0 or 4.0. So you want to actually minimize the number of inquiries that you have, boss. Okay. So to maximize your score, your VantageScore score, you want to avoid applying for more new credit for at least 6 months after. Okay. So here is the approach I want you to follow right now. I want you to write down on a piece of paper or in Excel what are your needs are in terms of funding for the next 3 months. Do you need a loan? Do you need a line of credit? Do you actually need a student loan? Do you need a car loan? So write those down. And actually what you want to do is you want to aggregate all of those credit card or loan application within a 14-day period, so that they all count as a single inquiry. Let's talk about utilization, boss. If you want to increase your VantageScore 3.0 or 4.0, I want you to keep utilization low. I don't care how you do it, but I want you to keep it low. So when we're speaking about utilization, we are speaking about revolving lines of credit. Revolving credit. This could be a line of credit or a credit card. Okay, it has to be revolving. And the thing here, let me give you an example. Let's say you have 4 credit cards. Okay, 4 credit cards with a total balance of $10,000. Okay, and you charge you charge stuff on all the 4 credit cards, right? And so the deal here is that you want to make sure that whatever happens at the end of the month, you make sure that your total balance, your aggregate balance on all 4 credit cards is below $3,000. What's $3,000? What's $3,000? $3,000 is 30% of $10,000. Okay, and 30% is really, the magic number that a lot of experts tell you when they talk about your credit utilization ratio. In other words, you want to keep your CUR, your credit utilization ratio, below 30%. Okay, so if we take the example of $10,000 in terms of your aggregate limits, you want to make sure that you actually have $3,000 at the end of the month. Now, ideally, you want to pay your balances in full. Because the whole thing is that, when you keep balances, the lender is charging you interest and whatnot. And the last thing you want is to have to pay extra fees. If you can afford, if you have the cash to actually make the full payment, this is really important. Okay. Now, the thing here is that what will happen here is that the credit utilization ratio will become even more important as more and more lenders transition to the VantageScore 4.0, because unlike the VantageScore 3.0, which only looked at your credit utilization ratio for the previous month, what happens here is that VantageScore 4.0 considers your credit utilization ratio for up to 2 years prior. Think about that, 2 years prior. Here's a bonus for you. The bonus for you have made it so far. What you want to do here is that you want to monitor your credit utilization ratio. And you want to monitor this not on a monthly basis. I want you to monitor this on a weekly basis, boss. If you start doing this, you'll be surprised how more disciplined you'll become when it comes to making sure that your credit utilization ratio stays below 30%. So here you have it, boss. Here you have it. I really want to talk about free score, because the whole thing is that, so just kind of quickly recap here. If you want to raise your VantageScore 3.0, make sure that you stay on top of your bill payments, pay attention to your credit depth and your utilization. I want to talk to you quickly about free score, because the whole thing is that you might be asking me, well, I heard good things about the VantageScore, but how do I get it for free? Because the whole thing is nobody wants to pay for their credit score anyway these days. So how do you get actually a VantageScore for free? Now, several banks and credit card issuers offer free VantageScore 3.0 scores to consumers, though these are especially only from a single bureau. In some cases, you don't even have to work with that lender to receive a free VantageScore. So the thing is, if you go on VantageScore's website, they actually have a list of companies that provide free VantageScores to their customers or the general public. So you have CreditWise from Capital One, you have Chase, you have One Main Financial, US Bank is in the list, American Express, Synchrony Bank, you have Credit Karma, Credit Sesame, you have Lending Tree, you have Nav, you have NerdWallet, and you have Wallet Hub, and the last but not the least, you have Savvy Money. Okay, so while not really free, you can also get Vantage scores directly from the credit bureaus. You might purchase one of these scores to supplement your free Vantage score if your free score is only based on your credit report from a single bureau. Because the whole thing here is that you want to have a clear idea of what's written about you, financially speaking, on all the 3 credit bureaus: Experian, TransUnion, and Equifax, not just one bureau. Okay, so it's important. But now we have to think about how important is it for you to know what your VantageScore 3.0 is really. Okay, because there is a cost factor associated with the whole equation here. And the thing I want to say before closing to this conversation is that VantageScore 4.0 is still a relatively new scoring model, and there doesn't appear to be a place where you can view this yet, either for free or for purchase. But for most consumers, your VantageScore 3.0 should be similar to your VantageScore 4.0, so it shouldn't really be a concern if you were to ask us. Thank you so much for your attention. I really appreciate it. I was just talking to you today about how to raise your VantageScore 3.0 score real quick. So I spoke to you about understanding what the score is about, what having a good score really means, okay, the importance of bill payments, credit depth, utilization, and how to get a free score. Thank you so much. God bless you. I will see you another time. But until then, remember, stay marvelous.